Marc Carignan, author of the best-selling book, The Bitcoin Tutor, and founder of thebitcointutor.com. Bitcoin, it's nothing short of the next wave of technology. You see, Wave 1 was about bringing computers to the masses with PCs. Wave 2, of course, was the Internet, which spawned e-commerce, social media, and mobile devices. Wave 3 is happening right now, redefining the future of finance and money. And it's based on Bitcoin and its underlying blockchain technology. I founded the Bitcoin Tutor to assist people to truly understand what this next wave is all about. The company is focused on helping people use this new technology safely, successfully, and profitably. Thanks for taking these early steps with us. We're ready, so let's go. Today I'll be presenting Bitcoin and the Blockchain 101. Let's get started. Let's see what people are saying. You can't stop things like Bitcoin. It will be everywhere and the world will have to readjust. World governments will have to readjust. That's by John McAfee, founder of McAfee Associates, inventor of the famous McAfee antivirus software. Bitcoin will do to banks what email did to the postal industry. That's Rick Falkvinge, founder of the Swedish Pirate Party. And closer to home here in the US, virtual currencies may hold long-term promise, particularly if the innovations promote a faster, more secure, and more efficient payment system. That's Ben Bernanke, chairman of the Federal Reserve, who served till 2014, saying something quite positive and really a disruptive comment about what might happen here with Bitcoin and the blockchain. Before we get started, let me tell you a little bit about myself. I'm founder of the Bitcoin Tutor and author of the book by the same title, best-selling book, The Bitcoin Tutor, Unlocking the Secrets of Bitcoin. I'm also a Silicon Valley entrepreneur who served in software sales, consulting, training, coaching, and authoring roles. My role really is to simplify technology concepts. I've taken the role of evangelist and technology translator, if you will, for public understanding. And I also have a strong Bitcoin interest and have experience over the last couple of years. Like so many, 2 or 3 years is a long time in the Bitcoin world. So here's the agenda for today. It's broken into 3 parts. First of all, I'm going to start with what is money. And this is really important because it forms a basis for understanding Bitcoin and the importance of it. Secondly, we'll go into what is Bitcoin, the technology, the network itself, and then the currency. And then finally, we'll close with what is the blockchain. This is the public ledger and how it works to support the Bitcoin network. So let's start. What is money? So a lot of folks think if you open your wallet and see pieces of paper in there, that's money. And for many people, of course, today it is. But money was not always slips of paper. Money really started more in a bartering system where people would barter grains, other food, animals. As you can imagine, it got a little tricky if you wanted to trade goats and cows. How many goats does it take to buy a cow? And sort of hard to make change if you only want to sell half a cow. Seems silly today, but bartering was, obviously key before currency. And then, as time went on here in different cultures, including in China, in Rome, in the Ottoman Empire, and you'll see some examples of those coins, and of course in ancient Greece, there was a move toward using precious metals that represented value. And truly the precious metals were seen to have value. Furthermore, they were coined to make them of more equal weight and make them more interchangeable. So what are the characteristics of money? Well, depending who you speak with, these are 7 of the characteristics that most people agree on. The first is money must be a unit of account. That is, it must be measurable and it must be able to be accounted for. We got to keep the accountants happy and allow them to measure what we're spending. It needs to be a medium of exchange. That's simpler than barter. It's we don't want to be carrying cows around. We want something that's easy to use. It has to be portable. The ideal limit there is that it has to fit in your pocket. If it doesn't fit in your pocket, it's not that portable. It also needs to be durable. It needs to be something that does not wear out very easily. It should also be divisible. You need to be able to make change. Needs to be fungible. That means one unit is like another. $1 bill is like another. One gold coin is like another in purity, in value, and in denomination. And finally, it should be a store of value. And really this means it has to hold its value over time. Two main parts of that are commodity value and scarcity. And scarcity is a very important concept that's being overlooked today in the financial markets, and I'll talk more about that in a moment. If it doesn't meet all of these criteria, then I will claim that it's not money, it's simply a currency. So we'll take a look at our current system and Bitcoin and see what we think it is. So today we have what's called fiat currencies, and this is an important distinction. Previously, money was something valuable. It was gold coins or other coins or items of value. Later, IOUs became the first paper money, and some claim that this occurred first in China before it went into Europe. The idea was that you would have some commodities on deposit, basically, and you would get a claim check, and people would use these claim checks, these IOUs, because it was easier to carry around. Then, paper money issued by sovereign governments was commodity-backed. This means that there was a certain percentage, often around 40%, of the value of a currency that was backed by a commodity. This would help stave off runaway money printing, for example, because you always had to have enough commodity to back it up. Today, though, currencies are fiat, and fiat really just means by decree, and usually this is by decree of the sovereign government that issues that currency. Great quote here from Ben Steele and Manuel Hines in their latest book. Only in the last 40 years of the last 4,000 has humanity not consistently based its currency in metal, specifically gold. So this is telling us something, and we'll look more at that. And in fact, there was a fiat experiment right after World War I in Germany, in what's often called the Weimar Republic, because that's where the new constitutional government was created. It got to the point where all of this was fiat, not backed by anything, and what happened is that people were moving truckloads of Deutschmarks to try to buy things like bread and just basic foodstuffs between World War I and World War II. And in my book, I talk about this and even get to the point where there's some historians that believe that this was part of the discontent that occurred in the German population that fed the Third Reich and the movement into World War II. A more recent example is in Zimbabwe here in the 70s, where they got to the point where there was such runaway inflation they were printing trillions of dollars on a single note, and in this case their largest bill, the $100 trillion note. And you can see the amount of paper that this child had to carry around just to buy food for the day. In the US, I call August 15th, 1971, the day that money died. And this is the day that the U.S. left the backing of the U.S. dollar against the gold reserve and became completely fiat on this day. Richard Nixon is pictured because he made an announcement on television that day about the temporary change that was happening. Switzerland was the last of the Western countries to have a gold-backed reserve, and they were compelled to release that in 2000. Primarily because everyone else had, and their currency was becoming so valuable that it was tough for them to do trade. Today, people consider fiats to be normal. However, I want to warn you that fiats have always failed. There's no example where fiats have lasted more than about 40 years. And right now, this is driving huge interest in gold and Bitcoin by those who understand history. Okay, so now we have our brief background on money. So let's take a look at Bitcoin now with that context. So what is Bitcoin? Well, Bitcoin often is spelled in two different ways. Often with a capital B, which refers to the technology and the network of Bitcoin. And then sometimes with a lowercase b, that refers to the digital currency, or sometimes referred to as a token. Now, this is not used consistently, but many times it is used in this way, and the important thing to take away here is that Bitcoin actually refers to all of these things. So let's take a look at the network first. Now, networks typically come in three varieties. They come in a centralized variety, which is very much like the financial system today, where there's a single trusted player in each of the networks, whether that's a specific bank or a credit card network or some other trusted party. Or it comes into a decentralized version where there are a set of redundancies, but still a set of trusted parties or trusted nodes in this network. And then we have the distributed network. There's very few examples of that today, but this is exactly what the Bitcoin network is. It's distributed. That means every node has a control component, and to do that, of course, each node needs to build trust in some way. So the way the Bitcoin network works is that the network ensures that transactions are valid with cryptography. It ensures the accuracy of this distributed database by performing and solving cryptographic puzzles, and the network itself is referred to as the blockchain, or the database itself is the blockchain. So let's break that down. First of all, cryptography. Cryptography is simply a type of mathematics. It's a complex mathematics that creates something called encryption. The idea of encryption that it's difficult to go back to the original information. So the decryption is difficult, and for all intents and purposes, it's impossible by most people. It actually facilitates private communications. It's used extensively in government, in military, and more in private communications. Now, it has inherent value because cryptography itself creates this kind of trust, and therefore it's seen as mathematical value. And this is important when we look at the value of currency or money. Now, this has spawned cryptographic currencies, now being called cryptocurrencies or simply cryptos. These are digital or virtual currencies that utilize cryptography, and they utilize them to guarantee the transactions and to also guarantee the ledger itself, the history of transactions. The algorithms that manages govern their generation, so the creation of new currency, as well as verifying the secure transfer from one party to another. And there is governance, but it's not by humans, it is by mathematics. So there is no politics that come into play when it comes to governing these currencies. An important distinction also is that this is digital cash. It is not digital credit or debit cards. It is actually one-way transactions. It is not like credit cards today where you're giving an authorization for someone to withdraw funds from your account. You're actually transferring funds. And as such, it's seen as the first secure digital cash online. So what is Bitcoin? Well, Bitcoin is the premier cryptocurrency, and it also has a certain notation that we should be aware of. So you're all familiar probably with how dollars and euros and pounds are written with the currency symbol for each of those currencies. To the right here are the currency symbols that are being adopted for Bitcoin. The large B for Bitcoin itself and the small b for bits, which we'll get to in a moment. About Bitcoin, it has a lot more precision in currency. Most currencies today have 2 digits after the decimal point, basically breaking everything down into 100 cents or 100 parts. Bitcoin breaks everything down into 100 million parts, or 8 decimal places. And you'll see this allows a lot more flexibility in the actual currency notation, and will allow it to maintain much more value and make it easy to notate it. The smallest unit of Bitcoin is known as Satoshi, and for those who know about the history of Bitcoin, it was created by Satoshi Nakamoto, which is a pseudonym, we believe, of the person or persons who created this new advancement in currency. So the smallest unit, the 1/100th millionth of a Bitcoin, is called a Satoshi. So there's 100 million Satoshis in one Bitcoin. In the middle there's something that we call a millibit, or simply a bit, which is a 1,000th of a Bitcoin. We consider that this is going to be a common form or common denomination that will be used for Bitcoin. For example, right now, if you have 12.34 Bitcoin, this would be 12,340 bits. Now, this is important because the value of Bitcoin right now makes it the most valuable currency in the world. You see, €1 equates to about $1.12 US dollars. One pound sterling is about $1.41 in USD. The most valuable fiat currency today is the Kuwaiti dinar, and even that's only $3.42. But Bitcoin is valued right now at about $420. Now this makes it a little bit cumbersome to use because of all the decimal points required if you're just buying something like a cup of coffee. So the idea is bits make consumer use easier. So bits again are 1,000th of a Bitcoin. So 1 bit at this current rate would be worth 42 cents. So it's a much more usable currency. So if right now if a cup of coffee would cost you $3, it would cost you about 6 or 7 bits. Now, why is this important again? Bitcoin, you know, we've been able to do commerce online with credit cards and debit cards, and we've seen over the last 20 years mail move to email, shopping malls be replaced more and more by online shopping. Medicine is being replaced by telemedicine, especially in more rural neighborhoods. And then banking is really being used more and more online and mobile. Well, finally, now we have cash that's digital. We have not really had yet usable cash until now with Bitcoin. So what gives Bitcoin its value? Well, when we looked at money, we looked at the idea of commodity value. Here with Bitcoin, first of all, like any currency, there needs to be a willingness of parties to accept it. No government forces people to use Bitcoin, yet tens of thousands of people, certainly tens of thousands of business and hundreds of thousands of people use Bitcoin today. There are also Bitcoin exchanges, primarily online, but also that occur in person. And these regulate the prices simply by supply and demand, by market forces. What are people willing to buy and sell a Bitcoin for? I also believe cryptographic security, as we talked about a moment ago, the mathematics of cryptography, also give Bitcoin value. You know, we'd be naive to think that mathematics does not have value in our society. And in fact, the very first messages that went into space were encoded in mathematics, as many scientists believe that would be the international or the intergalactic language to be able to speak with other races. Finally, there's no central authority. Many people see this as valuable, especially with all the currency manipulation happening in the world today. There is no central bank or government or politics that come into play here. And there's no stimulus, quantitative easing, or other currency manipulation that affect the price. This is purely supply and demand. Now, of course, supply and demand is also affected by news and people's willingness to accept it or what people believe this currency or this money is. But again, there's no direct involvement by government. So let's take a look at our characteristics of money and see if we can agree whether or not Bitcoins are money. I think first of all, with the 8 decimal places for notation, I think it's indisputable that Bitcoin is a unit of account. In fact, it's much more precise than dollars, euros, or pounds. It's a medium of exchange. Of course, it's simpler than barter. It's simply a digital version of cash. It is actually quite portable. The record is held online, so it's really available anywhere you have online access. But more importantly, you can actually have a Bitcoin wallet, which we'll talk about in a moment, on your smartphone. So you can actually have the representation of it in your pocket on your phone. It's also durable. As far as I know, digital bits don't wear out. They can be backed up numerous times as well. And they simply are ones and zeros that stay around. It is divisible, of course, and again, with much more precision because we can break it down all the way to a Satoshi. It's also fungible, and this was actually one question that a lot of folks early on weren't sure about. They weren't sure if, let's say, a Bitcoin was used in an illicit activity, would that Bitcoin be, since it can be derived or it can be traced back to its original use, would it still have the same value? Thanks to the U.S. Marshal's Office, we now know that for sure. They confiscated some Bitcoins a couple of years ago from some illegal activities and then auctioned them off, just like they would auction off any other thing of value. And so the U.S. government agency has basically confirmed that the fungibility of a Bitcoin, that one Bitcoin is as valuable as another. Finally, the store of value. And I have a question mark here because we believe there is value, and especially in the scarcity of Bitcoins. And there is a limit to how many Bitcoins will be created. And whenever there's a limit to something, there's value. The question that comes into play here is the volatility of the price of Bitcoin has been quite extreme, perhaps because of the small number of folks early on that were trading it, and also the lack of clarity about its future. There is more stability coming to Bitcoin over the last year, so time will tell, but I believe that this will show that it will hold its value over time, but again, the jury is still out on that. So based on that, I'll ask you to think about, is Bitcoin money, or is it simply a currency at this point? So let's see what other governments are saying. In Australia, the Reserve Bank said that there's no law against transacting other currencies, and that included Bitcoin. In Canada, it's regulated under the anti-money laundering rules and the counter-terrorist financing laws. In China, private parties can hold and trade Bitcoins, but banks may not. In France and in many countries in Europe, there's no specific laws or regulations about Bitcoin. In Germany specifically, it's considered a legally binding financial instrument, and it falls into the category of private money. Now, Russia, you've probably heard about, that has banned Bitcoin. Well, the truth is there's actually no specific bill that's been passed. There's some administrative agencies that have been discouraging its use. However, that seems to be turning around, and I think in 2016 we'll see Russia come around and look at how to embrace Bitcoin in the blockchain. In Singapore, the monetary authority stated that whether businesses accept Bitcoins or not is their decision. So again, it's being seen as a decision that merchants and consumers get to make. In the UK, they've stated that Bitcoin is currently unregulated, meaning it can be used by the parties who want to use it. What about the US? The US has had a bit of a confusing history here. In the US, the courts in 2013 had a certain ruling. In fact, a magistrate judge in a Texas U.S. District Court classified it as a currency. Not long later, the U.S. Treasury classified Bitcoin as a convertible, decentralized virtual currency, which is a mouthful, a bit later after that court decision. But it's not as clean as that. The IRS actually had a ruling at the end of March 2014 that was backdated to 2013, where the guidance they provided to people trading Bitcoins is that it's considered as property for federal taxation. So the idea of what was the basis price where you purchased it and what was the price where you sold it, and obviously the taxation would be based on that gain or loss. And most recently, in September 2015, the CFTC in the US classified Bitcoin as a commodity. So there has some property characteristics and some additional ones as well. So expect this to continue to change in the way that governments deal with Bitcoin. So let's look at specific value. So in January 2009, Bitcoin, the network itself, started running. So it had obviously no value at its inception. By April 2013, at that first blip in the chart on the right, you'll see that the value of Bitcoin rose to $266, quite an amazing increase in just a few years. That was based on the Cyprus bail-in. And again, for those of you who have been tracking what happened there, in 2013 there was a failure of Cyprus banks. And so the government made a decision to tap into shareholders or banking deposit holders' cash and took up to 60% of each depositor's cash to bail out the bank, and that was called a bail-in. And that scared people about the trust of the banking system, and there was a lot of money that moved into Bitcoin. By November 2013, the highest peak on that chart, it hit the highest price so far in the history of Bitcoin, over $1,200 US. And then it dropped to $650 just a couple months later with the failure of one of the most popular Bitcoin exchanges, Mt. Gox. The reason for that failure has still not been publicly announced, but many people believe it had a lot to do with failure of security of their own computer systems internally. A recent low was March 2015 when it went all the way down to 200. And the most recent prices of this presentation was $417 with 15 million Bitcoins in circulation and a market cap of $6.5 billion. So you can see it's still a young currency, but there's a lot of momentum rebuilding now, and you can see the arrow is definitely back and up to the right. So that is Bitcoin. So let's take a look now at the third and final component, which is blockchain. And to understand that, we still have to talk a little bit more about Bitcoin. So where do Bitcoins come from? Now, if it's a commodity, you might imagine like gold, it might come from true mining in the earth. And in this case, this guy is holding a piece of gold ore from the earth. But for Bitcoins, it comes really from computers, from mathematics, and from growing, very large and growing data centers. So to do that, we have to do something called Bitcoin mining. And that's, again, to equate it, that term is to equate it to the idea of commodity mining. But the mining process actually has three main components. One is to approve transactions, and transactions simply meaning when one person transmits Bitcoins to another. Also, it needs to add records to the public ledger, which is the blockchain, about those transactions. And finally, Bitcoin mining creates new Bitcoins. It creates new currency in the ecosystem. The way that happens is through math or cryptographic puzzles. So it's truly a game. It's a competition. So what happens is that for each miner, which is really a computer system, each miner needs to solve a problem, a mathematical problem. And the Bitcoins are awarded to the winner. And that game occurs every 10 minutes. So there's a new match that occurs every 10 minutes, and it's done that since its inception in January 2019. Which means right now we're up to about 404,000 blocks in this blockchain. So how does this game work? Well, there's a certain goal, which is called a hash value. And the solution gets run by running what's called a hash function. And that's the mathematical or cryptographic puzzle. And that game continues to run until the value that is desired occurs. And the value is all based on the number of leading zeros in the answer. So it's a simple game. If once you get the number, in this case we just got it now, the right number of leading zeros, you have won the game. Now, it seems like this could be somehow tricked, but there are many ways that provide security and reasons why you can't cheat. And this includes this solution has to incorporate the previous block's hash value. It must include a hash value based on all the transactions in the block. It must be verifiable by anyone else running that hash value. It must supply what's called a nonce, and this is the key factor that changes. And it's a 32-bit random number, and once that number gets added and included into this puzzle, once we find the right nonce, which is really the game here, if you find the right nonce that provides the right solution, then you broadcast it as the first person who's solved the puzzle. And once everybody else verifies it, then you win. You win the game, a new block gets created to the blockchain, and you are awarded Bitcoins. So again, miners aren't actually mining ore, they're actually network computers running Bitcoin software. They are today high-end computers. When Bitcoin first started, you could run it on your PC, but that's not possible anymore because of the power required. They're run using special application-specific integrated circuits. They're often liquid-cooled, and they operate in the trillions of hashes per second. That means they can run this game over 1 trillion times every second. Also, computers, these miners are running in mining pools. It's very difficult when there's tens of thousands of players and there's only one winner for you to win very often. So they work in pools, and the idea is it's better to put your processing power together, and it's better to win little fractions of a Bitcoin more frequently than big rewards infrequently. So that it leverages efforts of the mining, and the rewards are shared. By the way, the rewards were put into place by Satoshi Nakamoto to encourage mining, because as there's more miners or more Bitcoin miners joining the network becomes more stable, powerful and secure, especially if parts of it drop out because of lack of internet, lack of power, whatever might happen. Because it's distributed, the network continues. Now, there's a side effect that happens from adding more power, is that math puzzles get solved faster, and often they get solved too fast. Remember, the network is trying to regulate itself so that a new block and a new game runs every 10 minutes. But as more and more powerful computers come and compete, these blocks get created in 9 minutes, in 8.5 minutes, and all of this. It happens faster and faster. So the Bitcoin network and the blockchain infrastructure below it is self-regulating. So let's take a look at an example. Here's a 2-month example of what happens with this self-regulation. The red line with the different tiers is called the difficulty. And you can see that as the hash rate, which is the speed at which these puzzles are solved, goes up, the difficulty also goes up. And in the Bitcoin network, the blockchain itself, it's designed to readjust difficulty every 2 weeks, approximately. It's actually every 2016 blocks. And so when the hash rate goes up dramatically, you can see that in this first tier that the difficulty went up quite fast. And then it went up again, and then the difficulty was so high at one point that the hash rate dropped off, and that it took over 10 minutes to actually create blocks. So the difficulty in that next 2-week interval went down a little bit. And then over time it adjusted back up. So the network is self-adjusting, and this is part of the agreement that all Bitcoin miners have to subscribe to actually be able to play this game. Well, so how many Bitcoins are there? Well, right now there's about 15 million in circulation, and the algorithm will top out at 21 million. And the reward for playing this game halves every 4 years. You see, the Bitcoin reward initially started at 50 Bitcoins. And right now at $400 a Bitcoin, that's quite a nice prize every 10 minutes. But the network was also designed assuming that the value of Bitcoin would increase, and so that the reward could decrease as the total number of Bitcoins gets mined. So in 2013, the current value also is 25 Bitcoins. So right now, every 10 minutes, 25 new Bitcoins get awarded. And during the course of this presentation, this award happened 3 or 4 times. As of July 2016, the Bitcoin reward is expected to halve again, and this time it will go to 12.5 Bitcoins. The final Bitcoins are expected to be mined around 2140. So let's dig in even more on the blockchain. So the blockchain itself is the distributed ledger. It's the chain of blocks that occur every time, that get created every 10 minutes. There are cryptographic algorithm or puzzles that get solved to secure that. All transactions are recorded and they're encoded irreversibly. And the reason that's important is because in a distributed network, you want to make sure that no single player goes out and makes a change, such as adding a 0, if you will, to the number of Bitcoins that were transferred, changing it from 10 to 100. That's really impossible given the cryptographic hash algorithms that get used and the fact that the blocks are truly chained. As I mentioned briefly, when you solve the puzzle, one of the inputs to that puzzle is the hash or the result of running the previous block through that algorithm. So what that does is indelibly link the blocks. So if you wanted to change a block, let's say 10 blocks ago, which is really just a couple of hours ago, you would then also have to regenerate every block after it, and you would have to get 51% of all miners in the network to also agree to make that change, which is also a risk because anyone who's won an award over the last 10 blocks would lose their reward and they would have to fight for it again. So the whole idea of this is that there are built-in incentives for the miners to actually do this properly, as well as algorithms that enforce it. Another great feature of the blockchain is that it is transparent. You can use a blockchain explorer, which is really an online program that's free to use to look at any block in the history of the blockchain. So really this encodes every transaction that's ever occurred in Bitcoin since what's called the origin block. Also, people have talked about, Bitcoin being anonymous. Well, cash is anonymous, but Bitcoin is a bit more secure than that. We call it pseudonymous because of this transparent ledger, this blockchain, all transactions are recorded by public keys. Now, although the owner's names are not listed, if you know someone's public key, then you know whose Bitcoins they are. And of course, as I mentioned, anyone can view the contents, but only the owners of the Bitcoins can transfer them. So what designates an owner? Well, we have something called public-private key pairs. This is another form of cryptography that's used by Bitcoin and the blockchain. The first was solving the cryptographic puzzles that secure the ledger. This is all about securing the ownership of the Bitcoins. So public keys, which are the public view of the coins that you can navigate in the Explorer, are derived from these private keys. So the private keys designate the ownership, and the public keys is basically the address where you can deposit Bitcoins or send Bitcoins to someone else. This uses something called non-reversible derivation. Non-reversible derivation. This is cryptographic algorithms that were created by the NSA and other groups to really confirm that there's true ownership. So the ownership is designated by controlling the private key. The private keys are used to sign or authorize transaction in the cryptography. Public keys are used to verify those signatures by anyone. So anyone can verify who owns Bitcoins. And then there's a final component called a wallet address, which just makes it easy to use and deposit Bitcoins, to send Bitcoins to someone else. Let me give you a simple example to look at private and public keys. The whole example of a safe deposit box in a bank is a good analogy. The public key in this case would be held by the bank, and they would have a set of those keys for the different boxes. The private key would be your safe deposit key that only you have, that is required to unlock that box. The big difference here on the blockchain is that all these safe deposit boxes have transparent doors, so everyone can see what's in everyone else's box. You can see how many Bitcoins are in each box. So this is a good analogy to think about. Now, it's very important to secure the private keys, just as you would secure cash, because Bitcoin is like cash. There are two general ways to do that. One, you can use a trusted third party or an exchange to secure them. Or secondly, you can actually secure them yourself, just as you would keep cash in a safe at home. Let's look at the first one. Secured by a third party, we recommend that you use what's called two-factor authentication. So just like you would go into your online bank account, the first factor is your username and password. The second factor, though, is a one-time generated password. The advantage of this is if somehow your password gets out and someone finds what your password is or guesses it, they can still not get into your account without this second factor, sometimes just written as 2FA. So the 2FA that is used by most, that is easiest to use by most folks, is either on a smartphone where you get a one-time password generator app, and there are several different makers of those that are usually free, and you encode a seed into that provided by the third party, and then usually every 20, 30, or 40 seconds a new one-time password gets generated. The other way to do that is that you can have a second factor or another one-time password simply texted to you using SMS. This is particularly useful if you don't have a smartphone and you just want to text it to you. So this creates a much greater security with the third party if you're going to secure your private keys with a third party. The safest way to do it here is with Mr. Snow Miser here. You want to freeze it. You want to put it in deep freeze. We call that cold storage, and that simply means you secure the keys offline, you hold them yourself. Three common ways is with a disconnected computer, a PC or a Mac that never goes online. You could also put it on a special USB stick, a memory stick that's only used for your Bitcoin keys. And then finally, a common way of doing it is paper wallets. Let me show you an example of a paper wallet. A paper wallet is simply a sheet of paper, a slip of paper that has two addresses on it. One is your Bitcoin address, which is the deposit, the public address that you would provide to someone to give you Bitcoins. And that's on the left with a corresponding QR code. And the QR code simply makes it easier to scan that in with your phone so you don't have to type in that string of numbers and letters because that can become tedious and error prone. On the right is the private key. And this is your secret key. This is the key you need to protect from others. And you can see that key is written underneath it as well. And in this case, you could print it out and put it in your safe, and you actually can delete the private key from your online source. And now the only way to recover that Bitcoin is with a scan of that private key. It's very, very safe. Well, there are some enterprising entrepreneurs that have taken that to another level and come up with these pre-printed notes, that look like sovereign notes here. But in this case, it's a little more fun. We have Dr. Evil on the left and Kermit the Frog on the right, and you can purchase these online. And the areas with the in the white squares with the QR codes are left blank. And then you simply put them in your printer and print your specific codes with the software that's provided. Here's another example where you can actually have a fold over region so that your private key can then be folded over and taped shut so that no one accidentally glimpses that code. In closing here, let's look at a few possible blockchain uses. We've talked primarily about money and value. And that is really the primary use case of Bitcoin and other cryptocurrencies. But it can also be used for other items of value, other forms of value. A common area that's being looked at right now, or a hot area I should call it, is smart contracts. Some of the characteristics and capabilities of Bitcoin I've not had a chance to go into in this 101 presentation, but it's actually been designed so it could have very complex multi-signature capabilities. For example, you can say something like 2 out of 3 private keys need to be used to designate and control the Bitcoin. So this is useful in a company, for example, where you might say 2 out of 3 officers need to agree to pay a certain bill. A lot of folks are looking at it as a decentralized database management option, as a big data, as an option to some of the other technologies that are out there today. It's possible also that tokens using something called colored coins or side chains, again, other concepts that we haven't talked about, that they could represent physical items. You can imagine keeping an indelible and public record of a deed for your house or title for your car in a blockchain. They're also seen as thousands of other uses in development today. Some folks believe there will be tens of thousands of blockchains in the future to manage all sorts of things. So it's really being seen as not just for money. Some final thoughts. The Winklevoss twins, Cameron and Tyler of early Facebook fame, they are very much involved in Bitcoin, have made substantial investments in it. They believe that the market cap could grow to 400 billion. Now that's a huge increase from today's 6.5 billion. And they equate that to the size of the modern day payments industry, where you would be combining American Express, Visa, MasterCard, Western Union. That's about their combined value. That would mean that the Bitcoin price right now would grow to over $25,000 per Bitcoin, another justification for bits to make it easier to use. And a quote that Tyler made was, "If Bitcoin is a better gold or seen as a type of gold-like asset, then it would be in the trillions on a market cap." And we feel that those are very real possibilities. So the opportunities are great, and there's a lot of excitement about the possibilities moving forward. I want to invite you to visit us at thebitcointutor.com. We have free how-to videos to get started with your own wallet and how to safely connect to your bank account. We have informative blogs that I update on a regular basis with my perspective of the news. I also offer consulting services to individuals and to companies who are looking to really take a look at the big picture here and how to safely buy and sell Bitcoins. And there's also a number of programs that we'll be announcing here in 2016. The book is also available online at your favorite bookseller and at Amazon online in multiple formats. And I'm also available on Twitter, Facebook, and YouTube. A gift for joining us today is that for just the duration of this conference, that we're making the Bitcoin Tutor book, the best-selling book, available for free as a PDF download. Simply go to this website address, thebitcointutor.com/fintech-summit. And that's a special gift for joining us here today at the Fintech Summit. And we hope this was valuable, and thanks for your time. May your journey in Bitcoin and blockchain be a valuable one. Thanks.